Tory Newmyer is Washington Post economic policy reporter joining us this morning to talk about specifically the collapse of the FTX cryptocurrency exchange and broadly about the state of the cryptocurrency industry. Like we do with a lot of these conversations, Tory, remind us what cryptocurrency is and how it's valued. What is it worth?
Well, it's sort of worth what people will pay for it. Cryptocurrency was uh, really conceived and launched in the wake of the great financial crisis as a kind of alternative financial system that was hoping to avoid the mistakes of traditional finance that had created some of the conditions that led to that collapse. And its key feature is this ledger that's distributed across computer networks around the world and allows for this thing, cryptocurrencies, to exist without any kind of central intermediary or authority. And the idea is that it returns power to people that way to take control over their own financial assets and the transactions that they do with them, and allows them to also operate sort of in a pseudo-private way beyond the prying eyes of the government or traditional Wall Street powers.
What is it that has made cryptocurrency so popular with investors?
Well, I think it really enjoyed a boom during the pandemic when you saw investors on Wall Street who were had a greater appetite for risk in an easy money environment in terms of the monetary policy. So it sort of inflated the value of the cryptocurrency market, inflated alongside riskier stocks like in the tech sector. But there's also this retail boom where people were getting very rich very quickly, and there was this kind of FOMO, fear of missing out effect that took place where people were getting stimulus checks and didn't necessarily have a need for them, opening accounts on some of these exchanges and buying coins and getting very swept up in this kind of get rich quick mentality that drove this boom that sort of crested about a year ago. And over the course of the past year, we've seen a tremendous sell-off in the overall market where it's down about 70% from where it was a year ago. The total value of the market was about $3 trillion a year ago. Now it's somewhere about $850 billion. And then on top of that, you've had all of these failures by high profile platforms that have kind of had a knock-on effect and have shaken customer confidence in the entire ecosystem.
How, if at all, is cryptocurrency regulated by the federal government or by state entities?
So there is a kind of patchwork of regulations that apply, and at the state level, some of these platforms get what are known as money transmitter licenses. A lot of these crypto platforms, are registered with an office in the Treasury Department, and so you will see people from the industry say, "It's not true that we're not regulated. Look at these licenses that we have." I think the important thing for regular people to understand, especially if they're thinking about getting into this, is that important for all important purposes, the industry remains unregulated. The things that you think backstop your traditional investments, deposits that you have in the bank, investments that you have in the stock market, those come with a certain expectation that the players that you're investing in or giving your money to are abiding by certain rules. There are people in Washington who are looking at their books. They are disclosing certain fundamental things about their operations on a regular basis. So if you're interested, you can go look. None of those apply to the crypto industry. And in fact, there's been a debate that's picked up urgency over the last year as the industry has grown and as we've seen these failures in Washington, both on the Hill and among financial regulators, about the right way to go about regulating this space. But in the meantime, no important decisions have been made about who should be taking the lead and how Washington should be applying, a century really of financial regulation that they've applied to traditional players to this new space.
We'll get into the FTX collapse in a minute, but generally, how do these exchanges work? Are they like traditional um, stock market exchanges?
Well, in some ways, they feel that way, and their FTX, which I assume we're going to be talking about here, it's the thing that's been, that's captured everybody's attention in the last couple of weeks with its really spectacular collapse, is one of these players. But there are a number of them, and they are designed to make the user experience very easy. So you sign up, you hook up your account to a traditional bank account, you trade dollars for some tokens, and then you're off to the races, and you can trade, and you can stash money, and do all sorts of things. Um, what I think a lot of retail investors probably don't understand is that there are ways that traditional finance is segregated. The functions of traditional finance are segregated in order to protect investors. So in traditional finance, banks are not also broker dealers, and are not taking custody of your assets, lending it out the back door, executing trades for you. All of these functions of traditional finance that are completed by different actors in that industry are in fact collapsed into these big centralized companies in crypto, and we've seen that is not really working out for investors who don't have any real visibility into that.
As I mentioned, we're going to be talking about FTX momentarily. I want to make sure that our viewers and listeners can get in on the conversation. For Democrats, use 2027-488-8000, Republicans 2027-488-8001, and independents and others 2027-488-8002. Among your reporting on FTX was the piece over the weekend. Sam Bankman-Fried charmed Washington, then his crypto empire imploded. First, on Sam Bankman-Fried, who is he? How did he amass such wealth and stature, I guess, in the crypto world?
He's a 30-year-old guy who comes from a distinguished family. Both of his parents are Stanford law professors. He grew up in the Bay Area, went to MIT, where he studied physics and math, and got very enamored when he was there by this philanthropic movement known as effective altruism that is now very in vogue in Silicon Valley, and has at its core this idea that you should go out and try to earn as much as you can to then give away as much as you can and do as much good in the world as you can. So he has said that he swears by this philosophy, and that's what drove him into finance. He started in traditional finance at a Wall Street trading firm called Jane Street, and discovered crypto while he was there. Saw some inefficiencies in the market that he thought he could quickly exploit. Ended up leaving Jane Street, launching his own trading shop, and then a few years ago launched sort of next to it, in parallel to it, FTX, which is this retail-facing trading platform for regular people to get in on this.
This seems sort of a meteoric rise. He's got stadium naming rights for FTX, other branding for FTX. Clearly, he had some financial support and backers behind him, correct?
He had a lot of backers, traditional finance people, venture capital, Temasek, which is the state investing arm in Singapore, up and down Silicon Valley and beyond. And then he was also making his own money, presumably through the trades that he was doing with the hedge fund that he started, which is called Alameda Research, and then by charging fees on trades that he was doing over at FTX. That's the business model for these crypto exchanges. Is they take a piece of every trade, and the higher the volume they do, the more money they make. And this entire empire was based offshore. It was originally set up in Hong Kong. Then COVID hit, and he moved to the Bahamas, very much on purpose, because there was a much friendlier regulatory environment there than he knew he would be facing in the United States. And it allowed the trading platform to offer a much fuller menu of risky trades to their customers than he would have been allowed to offer if he had set up in the United States.
What happened to cause FTX to collapse, and why did the rest of the other markets not not have any, it didn't seem to have any other effect on the other markets. So what happened with FTX?
So the proximate cause, the thing that the sort of straw that broke the camel's back, was he had a kind of frenemy, a rival, a guy who had been an original investor in FTX, who runs a rival exchange called Binance, a guy who's known in crypto as CZ, who had a stake. He had an equity stake in FTX as an investor. And once it became clear that they were going to be competing with each other, he basically sold his investment. And what he got out of the investment was tokens. Instead of just getting, dollars, fiat currency, the way you would expect it normally in,
Right.
in an investment, he got these tokens, a kind of cryptocurrency that was issued by FTX. And it's a rather illiquid token. It's hard to trade. And a couple of weeks ago, there was a leak of a snapshot of the hedge fund, Sam Bankman-Fried's sort of sister hedge fund that he runs, of their balance sheet. And it showed, to the surprise of a lot of people who pay attention to this space, that a lot of the debt that the hedge fund was maintaining was collateralized by this token. And the important thing to understand here is Sam Bankman-Fried, there are always questions about the relationship between the hedge fund and the exchange, and wasn't this a conflict of interest? And are you trading against your customers? And are these things really as separate as you claim? Sam Bankman-Fried would always claim these things were entirely separate. The snapshot of the balance sheet showed that they were in fact very intimately interlinked, and that in fact, if there was a run on this token, the entire system was going to be vulnerable. And CZ, I think, spotted an opportunity there, announced publicly he was selling over $500 million worth of the token that he held. And that sparked basically the equivalent of a run on the bank. Investors panicked and rushed to back out of, get their withdrawals, get their deposits off of FTX, and exposed this sort of festering problem at FTX, which was they did not have the liquidity to make those redemptions, because in fact Sam Bankman-Fried had been lending customer deposits over to the hedge fund to cover risky bets and losses that the hedge fund had made. So that's a little bit complicated. I think the important thing to understand about it is Sam Bankman-Fried was lying to his own customers, and we now know there are maybe more than 1 million people who are going to be left high and dry here, who are not going to be made whole because he was taking their deposits, claiming they were safe, and then lending them to the hedge fund and making these really risky bets with them.
Any idea among that million what the average loss will be for crypto investors?
We don't know. And there's a lot really about exactly what he was doing, where the money went. There was a $10 billion hole on the hedge fund's balance sheet. We don't really understand where that money went. It seems like the trading platform itself should have been profitable. Why did he need to make these bets? And where did the money go? These are questions that investigators are looking at, are going to try to understand as they do a kind of forensic analysis of the wreckage here. And this is going to play out in bankruptcy court.
We'll get to calls in a moment. First, though, a question from Steve on Twitter for you, Tory Newmyer. He says, convince us that crypto is not a scam, a Ponzi scheme, a simple, straight confidence game. He says blockchain is useful for smart contracts. As a foundation for crypto, people were rightly skeptical.
I'm not here to give investment advice, and I'm certainly not going to try to convince anybody of anything when it comes to this. I think, the watchwords for everybody are buyer beware. And, I think there are plenty of reasons to be especially careful, if not skeptical, of investing in the space, because the investor protections aren't there, but people have every right to make these decisions for themselves.
All right, let's hear first from Raymond in Silver Spring, Maryland. Thanks for waiting. Go ahead with your comment or question.
Yeah, good morning. Thank you for taking my call. I wanted your guest can comment about the scam coming out of Hong Kong, where you have people, they kind of pretend to be pretty girls who are looking for relationship, and then before you know it, they convince you to invest in crypto. So a friend of mine was a victim, sent $75,000, and then his account grew up to like $600,000. And then when he wanted to cash out, they told him he needed to pay a tax out of pocket of about $100,000 or so. So is there a way to recover some of the money, or can you speak about the scam that's going on?
Yeah, this is a scam commonly known as, it's a pig butchering scheme that unfortunately has become it's become very popular among scammers, I think because it works, and people who are perpetrating this have managed to collect in total, and we don't totally know the universe of victims here, but the estimates are, in the hundreds of millions of dollars, if not billions, that these perpetrators have managed to rip people off for. Again, it's one of these situations where if you don't know somebody that you've met online, and they're, you're trusting them, you've never met them in person, and at a certain point they're asking you to buy something and telling you they've got a can't miss investment opportunity. I think that it should set off a lot of red flags for people. The way that they typically gain trust in this scheme is they'll tell you that your investment just doubled or tripled or something, and you should make a withdrawal against the account that you set up to prove, to gain some confidence in it, to prove to yourself that, in fact, this was real. People do that, figure they've crossed some kind of, threshold and established the legitimacy of the thing that they're investing in, and then will really sort of double down and put significant amounts of money into this investment. And that's when the scammers will make off with your money, and you'll never hear from them again. And so that's why it's known as a pig butchering scheme. They're sort of fattening up their victims for this kill. And it's horrible. And, there have been way too many victims of this. As far as recourse, I think it depends on the particulars of the case. A lot of these are being done over some of these sort of name brand crypto exchanges that we've talked about. They have differing records when it comes to, working with victims and working with law enforcement authorities to help people recover funds and make them whole. But it is a massive problem.
Let's go to Ken calling from Roseville, Michigan. Good morning.
Good morning. Well, I got a question to come. Is this kind of like what Madoff did? And second, I've heard that he gave billions, and I hate getting pulled to the Democrats. If this is in the Democrat Party different, if they know that the money's went there, can they go back and get it from them people? Because they know and help them 46,000 people that got ripped off? That's just a question I have. Thank you.
I think, Sam Bankman-Fried is drawing comparisons to a lot of fraudsters. Madoff's name has come up, who was running a sort of classic Ponzi scheme. Elizabeth Holmes, sort of you name it. He joins a, ignominious now list of fraudsters who rose to prominence and were living, had these kind of outsized personalities, and then were revealed to be scammers. And I think we will see the full extent of this in time. But as far as the political dimension of this, it's very interesting, and I think it's something that distinguishes Sam Bankman-Fried is he understood that he could get a real competitive advantage for his company by crafting the rules, which we've discussed or have not really been written yet, by spending a lot of time and a lot of money in Washington, winning political favor, buddying up to the right people on Capitol Hill, buddying up to the regulators, and in a shockingly short amount of time, I think, managed to ingratiate himself with the right people. and was really on the verge of a major win with a favored piece of legislation that he helped craft that was going to help establish his company and a handful of others as sort of safer bets. And his investment thesis kind of relied on this, that it was going to wave in a lot of institutional investment that had been hugging the sidelines because they'd been nervous about the lack of regulatory clarity. And he was close to getting there. I think that bill is probably on hold for now as lawmakers turn to fact-finding and trying to understand exactly what happened here. He spent about $40 million in the midterms. It made him the second biggest Democratic donor this cycle behind only George Soros. He had a partner at his firm, a guy named Ryan Salam, who was giving on a similar scale, a little bit less, but over $20 million to Republicans. And I think that, explains a lot about the sort of rapid entree that they won to the innermost circles of power in Washington. You've already seen some members who got individual contributions from Sam Bankman-Fried return them or give them to charity. The fact is, a lot of the spending that he did was through super PACs that were not giving directly to candidates, but spending money in primaries on ad support for these candidates. So the candidates aren't technically, they weren't coordinating with the super PAC. And I think, I'd be surprised if you saw support that he spent in those races returned by candidates that emerged victorious.
For Tory Newmyer, let's hear from George in Albany, Georgia. Go ahead.
Yes, I got a question and a comment. My question is this FTX collapse, is that legal? The way they're doing people, you're putting your money in. And my comments about it, I'll say 85 or 90% of the people's putting their money in there, they ain't got no money no how. They need to hold their money in the regular banks and see what the bank's going to do. That's it. Thanks.
Okay, go ahead, Tory Newmyer, go ahead.
I was just going to say the SEC is investigating this entire collapse. They say they were already investigating months ago issues around compliance by the exchange. Now the Justice Department is investigating too, and I think there are some jurisdictional questions about exactly how far their reach extends, considering that the main platform that he was operating and the hedge fund were both headquartered offshore on purpose. He also had a U.S. arm, and it was a sort of little brother trading platform called FTX US that did a sliver of the volume of the main one because to be compliant, it offered a much more limited menu of trades to customers, and people were not really using it so much. But this is something that investigators are going to be looking at, and I think Sam Bankman-Fried is lawyered up, and the question about criminal liability is definitely a live one.
The chair of the Financial Services Committee, Maxine Waters of California, said this about the FTX collapse. The fall of FTX has posed tremendous harm to over 1 million users, many of whom were everyday people who invested their hard-earned savings into the FTX cryptocurrency exchange, only to watch it all disappear within a matter of seconds. Unfortunately, this event is just one out of many examples of cryptocurrency platforms that have collapsed just this past year. That's why it is with great urgency that I, along with my colleague, Ranking Member McHenry, announced the committee's intention to hold a hearing to investigate the collapse of FTX. But Tory Newmyer, you report in your article on this that Maxine Waters is one of those that Tory Newmyer was actively lobbying.
Sam Bankman-Fried.
I'm sorry, that Sam Bankman-Fried was actually lobbying. Yes.
Yes. So he was lobbying the Financial Services Committee. His big play was to try to get the CFTC, the Commodity Futures Trading Commission, established as the primary regulator for this space. And they would have oversight over at least the spot markets for both Bitcoin and Ethereum, which together make up about 60% of the total value of the entire crypto market. and then there would be a compliance regime for exchanges that listed those tokens, and they would then also register with the CFTC. And the important thing about that is it would take authority away from the SEC, which is overseen by Maxine Waters' committee and is considered to be a much tougher regulator. They have 6 times the staff. They have an investor protection mandate. They have decades of experience writing and enforcing rules around investor protection, whereas the CFTC was really going to be starting from scratch. And presumably the industry would get a seat at the table in helping craft the rules that would apply to them. So he was pushing a bill through the Senate Ag Committee that was going to enshrine the authority of the CFTC, and the Senate Ag Committee has jurisdiction over the CFTC, and it's kind of an end run around traditional financial regulators that Maxine Waters oversees. But he was not being picky about who he lobbied, and was obviously covering the Hill.
Let's see if we can get one more quick call. The House is coming in momentarily. Susan in South Carolina, and go ahead with your comment or question.
Hi. Well, I've been on here so long till my question finally got answered about the what he used the money for on the donations he made to the Democratic parties, and I think that money needs to go to charities, back to the people that lost the money.
Okay, and Tory Newmyer, will this make it easier to get some sort of bill passed through to tighten regulations on the crypto markets, you think?
I think it underlines the urgency of establishing some rules for the industry, whether that means that Congress moves faster to get this done, or the regulators move into this vacuum and start enforcing more aggressively and doing their own rulemaking absent legislation, is something we're going to start to get an answer to in the weeks and months ahead.
He is economic policy reporter for The Washington Post, Tory Newmyer. You can follow his reporting at WashingtonPost.com. Also on Twitter at Tory Newmyer. Apologies on that. Thanks for being with us this morning, Tory.
Thanks for having me.
And that will do it for the program this morning. We are back tomorrow at 7 o'clock Eastern here